What's happening? Are homes still selling? Answer, absolutely. It's time again for some property sales prognostications for Hamilton County, Indiana, based on February 2023 stats, plus some other interesting info about the federal funds rate thrown in. Exciting, huh? Hi, it's Susan Roberts with Roberts Realty Group, brokered by eXp, your best friend in the business. So, let's talk numbers. The sold listings at 345 in February of 2023 were basically equal to the 344 that were sold in February of 2022, but were up 25% month over month. New listings were down 16% year over year, but up 2.3% month over month. So who cares? And what does all this mean? We are still staying in a strong seller's market. A neutral market is 4 to 6 months of available inventory, which is measured by a calculation called the absorption rate. That's the number of days that it would take to sell all the current inventory. For February, the absorption rate was 1 month as compared to 1.5 months in January. The drop is due to the increase in sold properties coupled with the decrease in new listings. Total active listings were 360, which was down by 11.5% from January, but up a whopping 177% from February of 2022. Average days on market actually decreased from 49 to 45, and I would expect that number to keep decreasing as we edge towards the traditionally hot spring market. The median price dropped 3.5% to $415,000, which is still a 3.9% increase from February of 2022. Bottom line, the market is slowing, decelerating, but not crashing. Regardless of what you may hear in the national news, I still don't think our area is going to experience a huge shift downward. Obviously, the median price is continuing to stay strong, and if interest rates drop, the total active listings will continue to decrease with more buyers entering the market. I'm curious about your thoughts on the market. Is the uncertainty stopping you from buying or selling? Are you waiting to see what the interest rates will be? Waiting for prices to come down? Please leave your comments below or reply to this email. I'd really like to know what you think. That's TIA. Thanks in advance. On to the federal funds rate. It is the primary tool the Federal Reserve, aka the Fed, uses to influence the economy. The rate sets the target rate for borrowing and lending between commercial banks. This impacts the cost of money for businesses looking to invest and grow. After the Great Recession, the Fed dropped rates below 1% for about a decade to prop up the economy. Recently, they've been cranking it up to cool the economy off. And all that's why whenever the Fed raises rates, it doesn't necessarily mean an increase in mortgage rates. So, here's your cliff notes for this month. Buyers, time to start your search. There are currently more choices, and some sellers are willing again to make concessions. Remember, real estate is still one of the best investments over the long term you'll ever make. Start building equity. Sellers, time to start preparing your home. You can still get top dollar if you position and prepare your home properly. Add in a top-notch digital marketing strategy and you'll get top dollar. If you're still waiting to see what the market is going to do, I'd be glad to do a comparative market analysis for you. That's a CMA in realtor speak. Signing off, it's Susan Roberts with the Roberts Real Estate Group, brokered by eXp, your best friend in the business. See you on the other side of sold.